Why can't you stop share? Really questions to be answered. Look at the calendar. Double check. Yeah, but oh well, and I don't know what settings changed. Make sure it's working. Yes. You want this or you want to move it? No, you can keep it there. Okay. Oh, yeah. All right. Questions. I would love that. Any question that I can answer for you guys? So I'm Dareen, for those of you guys who don't know me. On Abe with Priority One Lending. Pretty much I'm gonna go over just very big. So can one of you guys walk me through what? So did you get a, feel like? Okay, and then if they tell you no, like where do you kind of go?
to the lender because it's
Yeah,
sometimes.
so I would go for a kind of go in the middle. So we're not always going to use their taxes. So things that I would advise you guys to that's a great question. Are you guys pre-approved? Well, have you been, and if they tell you yes, that's great. Or FHA, either or. Mind you, you're not even gonna tell them what documents to bring. This is just for you guys to know, like, hey, let me tell the lender, I have somebody for you. I have a potential buyer. They've been working for the last 2 years and they are either 1099 or W-2. The difference between the two is 99, you're self-employed. You file personal taxes and you may file business tax returns. You get a pay stub and you get paid whether it be once a week, every 2 weeks, twice a month, whatever it may be. You asking those very basic questions. What are you, does your credit look okay? You don't have to go into detail. My credit could be better. That tell them exactly what they need to do to fix it. Hey, I have a buyer. I talked to her about her credit, but she let me know that her talk to her. I'll talk to her, I'll go through, her, everything that based off of what I saw. One of which was keeping all, whatever the limit was on your credit cards. Once you start to go, above the 30%, you're between that 30% and that 50% range. You're going at like a once you cross over 50% of your credit limit, you're now at a D. Your family. Why that is, I honestly I couldn't tell you. But because you think about it and you're like, well, why you have the capability to be using this? I told her keep your balances under 30%. Focus on paying this card down. Days later, and her score went up 30 days later. Sometimes it takes a little bit longer. Everybody's credit is different. So I still encourage if they do have other questions, go ahead.
I'm sorry, but I wanted to ask you really
Yeah.
about
We need 2 years. We need two. Now, if they're not doing, let's say they're alone, where we're I've been filing taxes in the last. We have different options for you. You're not gonna go into detail with them, like, I wanna give them enough detail that makes them say, okay, let me talk.
So you look more knowledgeable that you're able to know enough
Exactly,
about
you
it.
want them to
That's-
know that, I know this is what you need to qualify. Now, what you're going to qualify for, what your rates are going to be. But the lender will. So when you ask them these questions. I've given some of you guys this before. In regards to documents. So whether you're a W-2 worker, pension and social security, whether you're self-employed, it lets us know, it lets you guys know this is exactly what. We're asking for basic documents, your driver's license, 2 months bank statements. We want your most recent 2 years W-2. I say W-2, they'll bring me their tax. There's 2 different documents. Go
What
ahead.
do you mean by if funds are seasoned?
So if funds are seasoned, that means the money that they're gonna use towards their transaction has been in their bank for 30 days or more. Now, if you don't want to go into detail with them in regards to that, that's fine. Us as the lender, we can go through that. Even if you guys get us 2 months bank statements, we can look at the bank statement and say, hey, I see that you don't really have much funds in this bank account. Is the money being gifted to you? Is somebody from your family gifting you this money? Or, do you anticipate the sale of a property? Are you going to use money from the sale of the house? These are questions that we can go into detail and ask.
So,
Yeah, so that's okay. That's perfectly fine. So we have multiple different scenarios where somebody in the family gifts them. Like you go to purchase a house and your brother is gifting you. It's gonna be in your brother's bank account. So there's gonna be different scenarios for every buyer. There's no buyer that's the same as a. And that's why when I say, when you look at this checklist, look at it and think, this is just very basic. Or like, this just helps the lender get a head start on the questions that we're gonna ask. So you're gonna use, like I said, your driver's license, recent pay stubs that cover the last 30 days, so we need a month. You want their 2 years W-2s. So now we would be asking for your 2020 and your 2021. And then a month to 2 months bank statements. We usually like to ask for 2 just because we want to see what the activity looks like in their bank account. For self-employment, it's going to be something that, again, the lender goes into once we receive their tax returns. They file something for their business and they use it. It's only in their personal tax returns. Then you also have self-employed borrowers that have a business, an LLC in their name, and they file separate tax returns for their business. Now, you don't want to go into detail. Well, do you file tax returns for your business? You don't want to go into that much detail. The lender will do that. But you do want to ask them, are you self-employed? Are you 1099, or do you get a W-2 and a pay stub every so often from your employer? If they tell you 1099, you automatically know tax returns. Years in tax returns. Filed. Okay, we need more documentation, or we're gonna need, we're gonna need those business tax returns. And same thing, you will still need their driver's license. of whether if you get social security and pension, that is considered income. So if your borrower tells you, honestly, I'm not working, but I do receive social security, it's not temporary social security, it's permanent. Or I get pension. I'm retired, I used to work for Ford, I used to work for GM, and I get pension. That is also qualified as income. We can use that as income. You're gonna ask them for their driver's license, their social security award letter. They get an award letter every year, lets them know exactly how much money they're making. When you get social security, you get a 1099. You're not getting a W-2, obviously. Those are the things you'll be asking for people that have social security or pension. Your buyer comes to you and tells you, I live in my primary. I am looking to sell my primary. That means the house is in their name. They own that. And I'm looking to buy a new house. That right there lets you know that somebody owns a house. We want to know that they own that house because they're going to be asking that on their loan application. That's one of the first questions we ask somebody. And if they say, yes, I own real estate, we need your mortgage statement. We need your insurance declaration page. We need your taxes. Those are all going to be liabilities on your application. If they're selling it, obviously they're going to let you know I'm looking to put my current primary on the market and I want to buy a new house. Or they're going to tell you, no, I'm going to keep this. That's good information for the lender because that's going to affect our loan application. So when you're asking these clients, that's another good question that you can ask them. Hey, do you own any real estate? Those are the three main questions you should be asking your buyers, especially if they have not already been pre-approved with somebody. You know that they has already advised them to take these steps. You're going to ask them those three main questions. That's going to help us, and it'll help you guide them in the path that they want to be in. They have income, tax return, or their income is all cash, and they say, well, I want to buy a house, and obviously you can't show up to the sale of a house with a suitcase full of cash. It's not possible. So what other options do you have for me? Now, us at Priority One, we have another option. We have our no employment verification loan. We don't need to verify any sort of employment. Where their money is coming from. So mainly, I think this started in California. The lender that actually started in California, what was happening a lot was there were a lot of people in like the marijuana business that had dispensaries. They were seeing a lot of cash flow, and that's not used as a source of income. So they needed to find a way to get mortgage where whatever cash you have on hand can be used. We don't have to verify your employment, but we need to verify that it is in your bank account. So if you look, the very top where it says purchase rate and term refinance. 740, 760. That's going to let you know how much we need. So the reserves are pretty much what their monthly payment for their mortgage would be for that many months. If they're a house and their mortgage, their PITI, their principal, interest, insurance, and taxes are going to be 1,500, right? So, and they need 4 months in reserves. They have a really good credit score. They have a 7. We know that they need 3 months in reserves. That means we're going to need 3. They're going to have to be able to pay 3 months worth of $1,500 in payment, plus whatever their down payment is going to be. Now the reserves must be in the bank. Your down payment, your closing costs, what you're putting up front, that can come from a gift, that can already be in your bank account, that differs. For something like this, for house with worth a minimum of $200,000. And they ask you to put 20% down on that house. So it's a little more money up front, but they're not verifying, like I said, employment, they're not verifying where the income is coming from. This is for a lot of people that see a lot of cash flow, but that cash flow is not 99 or a W-2. So we started this, I want to say, well, if Priority One started using this, I want to say. Started in California, and then one of the lenders came over here and they came to our broker and let us know, like, hey, this is the type of loan product. We've done it before. So a lot of truck drivers, believe it or not, a lot of truck drivers on their tax returns have a lot of deductions and, so many different things that come off of their tax returns. So, but they have a lot of money saved on the side. So they'll ask for a loan product like this where they don't need to go through the list of, can I get, balance sheet from your company? Can your accountant give me stating that your company is liquidable? They ask things like this when you're doing a loan application with somebody. This kind of avoids a little bit of those conditions. Not as rigorous on the income, especially when you know that your income is not fully being used, whether it be on a 1099. You have all sorts of cash coming in from wherever that may be. This loan product does not look at your employment. It looks at how much money you have in the bank. And that money will allow us, that money that's in the bank, your credit score, that'll allow us to determine whether or not you qualify for something like this. Make sense?
Is that,
Oh, no, we want to see the last 3 months. Well, if you have a 740 and you have a credit score of 740, I want to make sure that when I get your bank statement, just for your reserves, I want to be able to see that for the next 3 months, you can pay off. No, they're asking for docs. The only docs that they're asking for are your bank statements. Yes, on average of 3 months. I remember it takes about 30 to 45 days to close a loan. So let's say you have a buyer that is looking for this type of loan, and they give us the last 3 months bank statements, but it takes them to find a house. We will ask for updated bank statements. But if you have a buyer that is ready to put a purchase agreement, or is ready to sign a purchase agreement and say, hey, I found a house, I want to get pre-approved for this, we're really only asking for the last 3 months. Go beyond that. Unless obviously there's, they look at their last bank statement, one big cash lump sum of 30,000, and then they're gonna be like, well, hello, red flag. That means this money hasn't been seasoned. They don't have this money in reserves. This money for longer than 30 days. They want to see the last 3 months bank statements because they want to make sure that that money is consistent. They don't want to know where it's coming from, but they want to make sure that that money is consistent. Those reserves are in the accounts and it's consistent. You are easily the next 3 months if you have a 740 credit score. If you have a 700 credit score, they want to know that you can pay them. That you can make the next 12 months bank statements. And then you go even lower, the lowest they'll take is 640. And they want to know you can make 18 months. Showing us the last 3 months bank statement. Has that money been consistent? Has that money been withdrawing and depositing at a very average rate? Or is there big lump sums of money being? That's what they're looking for. So if they're not going to look at where the money came from, they're going to look at your deposits and withdrawals. They want to know that that money. That makes sense? So pretty much just so that there are three basic questions that you're gonna ask. You own any real estate? Number one. Have you been, are you 1099 or W-2? Those three questions will help out your lender in so many more ways than you can think. Just by asking. And if you don't think that they can answer that question, that's fine. You're not gonna get, sometimes they don't, like I said, they don't know the difference. They don't know the difference between a W-2 and a 1099. I've asked people to bring me their W-2s and they bring me a whole set of tax returns. And I'm like, nope, this is not it. You kind of have to break it down for them. Those questions will also help you. It lets you know, like, okay, solid buyer. While I'm waiting for their pre-approval, do I want to take the time to show them more houses, or am I a little curious to see, like, do they seem a little serious? Should I wait? Asking these questions, you're letting yourself know as the agent, okay, you know, this client knows what they're doing. They know they've been working for the last 2 years. They seem pretty confident about their credit. When I ask them, you know, are you comfortable with where you're at in your credit? You don't ask them for their scores, obviously, but once they volunteer that information to you by themselves, then, you know, some people do that. But if they're comfortable with like where they're at in their credit, you feel like you have a credit score, even if you don't want to ask, also okay. But you know, you're getting these signs from your buyers that let you know, hey, they seem serious. They know which documents that they need to bring. That's gonna let you know as an agent, showing them another house until I get that pre-approval within the next. And then if they're hesitant, they're like, oh, well, yeah, you know, I don't know, I have to double check. I can't really remember. You're like, okay, well, I'm not gonna spend any more time showing you these houses until I know you can get pre-approved with the lender. Determine how much time and effort you're gonna put. Obviously, you wanna put in 100% effort with all of your buyers, but it's gonna let you know how much time and effort prior to their pre-approval. We always encourage people before you go out and see houses, go get a pre-approval, because it happens so often where they find a house that they're in love with and it's not pre-approved. And then they come to get pre-approved and they, you know, just a few documents. And I'm like, no, I'm sorry, I need more documents. And they're like, I can't give you this pre-approval unless you show me, you know, what your pay stubs look like, whatever it may be. So then they're rushing. Your buyers is now almost discouraged, and you don't want to discourage them from that. You want to say, okay, that's okay if you're not pre-approved. We also have a program that, you know, the loan officers pay for themselves. It's quick. What we do is we put their information in, report, and we say, hey, this system. We'll put their name, their information through the system. It gives us back a list of things that they can do and what their score will go up by. Majority of the time, we can pretty much read their credit report and tell them this is what you need to do. But if not, we still have another option for them because we want to get them to that point. Abe and Dahlia have both been very trying to educate buyers on what they need to do with credit. So many people don't know the importance of credit and how easy it is to ruin your credit. And they come in to buy a house, they're first time home buyers, and they're like, oh my God, now what? My credit is shot. I don't know what to do. Anyone who gives you advice on how to rebuild your credit is. We had a client that just came in yesterday. Was like, well, I thought if I pay my monthly payments on time, that I'm good. Like, why does it matter? They gave me $800 to use. Why can't I use it? Why is my credit score going down because I'm using the money that they gave me? And we had to explain to him how that works. Well, you have to stay under that 30% threshold. You have to stay. No, go ahead. You have to stay under that 30% threshold. This is what happens when you go up to 50%. This is what happens when you go up to 75%. This is what happens to your score. And he looked at me like baffled. He's like, I've never heard this. I've been in this country for 15 years and I've never once heard this. And it's because they don't want your credit. And we don't want that. When you have a buyer that credit, that's okay, bring them to us. We will help build that credit with them. We will help them get to the spot that they need to be so that they can actually buy.
So any property, before you have a with this person, and I told her I don't work with it anymore. But especially if in this market, there's, the houses are flying off the market. We were barely, I'll schedule 5 showings for the weekend. 4 of them will get canceled because they got accepted. So there's, I don't know if this is,
Houses until
Yeah.
they get the pre-approval, but some
So
agents are still very comfortable with that. At least ask those questions that I was telling you. So you won't know 100% where they. Already be pre-approved. Or they may be able to get pre-approved, but they didn't get us their documents in time. It becomes it's a very, and for us as lenders and agents, as stress-free as possible. In this industry and buying my house, when I tell you my nerves were everywhere, I mean, on both sides of the table. So I understand why. Rush, 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 rush. We don't want. We also want to help keep them calm. We want to give them as much information as possible in regards to prior to looking at houses. And you also want to know this market now is accepted. Buyers properties that are well. That pre-approval is going to be your ticket. And also getting the client to a point. I have my cell phone on me.